are revolution. Will revolutionize every aspect of our society, right? I just want to kind of show you a few of articles mentioned about blockchain technology and from the media. So we all share the enthusiasm about how the blockchain technology can bring positive impact to every aspect of many industry and the society. But on the other hand, there's also growing concerns and criticism about cryptos. There are so many speculations, scams, and bubbles. And if you talk to any economist or any central banks, many of them, for example, former Federal Reserve Chair Yellen, and also the current U.S. Treasury Secretary, she actually have a very negative view about cryptocurrencies, and also Bob Shiller, a Nobel Prize winner, also have negative view about Bitcoin, and many of them think that there's a lot of bubble and etc. Now, this kind of debate is kind of confusing or puzzling in the sense that I want to kind of summarize a little bit about this narrative. Is that in some people think that the blockchain technology is so promising, and which is used for cryptos, but many people think that the application of blockchain technology in cryptos are not good. So the crypto space have a lot of scams, fraud, etc. So one central question, essentially, if you think about deeper about what economic question we can think about is about this debate is whether technology matters for crypto evaluation or not. This is also kind of related to the probably in the finance space in general about corporations, right? Where technology matters for corporation as well. Back to early 2000, the tech bubble, etc. So this paper provides evidence, try to examine whether the technology of cryptocurrency affect their valuation or not. This task sounds easy, but is very difficult because measuring technology is very challenging because of limited information available. Now, for people who may or may not familiar with cryptocurrencies, there are not really much information available except that we know the cryptocurrency price. So it's not like stocks that you've got a lot of financial statements, accounting information. For the cryptos, there's not much information available. In this paper, we rely on the self-disclosure. It's called white papers. For each cryptocurrencies, when they try to launch, and they, not all of them, but most of them, they will provide so-called white paper to describe what they try to do, and usually they will try to attract funding, developers to carefully describe all the aspects of the initial coin offerings. And so that's kind of similar to kind of IPO. So in this case, we focus on this document because this is really kind of relatively one of the most important information source that we can utilize for the cryptocurrencies. Now, one challenge about analyzing this white paper is text data, right? So the text data is not as easy as a numerical data to be analyzed. So in this paper, we have to realize on machine learning method to read and understand these texts. We use both supervised and unsupervised machine learning methods, for example, LDA, word embedding, etc. And try to, I will talk about detail in a minute, try to group, to extract topics, different topics from their white papers. Just want to give you a preview of the results. So we use machine learning method to construct tech index for each cryptos. And we found that the cryptos with high tech indices are more likely to succeed, such as get fundings listed on the crypto exchanges, and less likely to be delisted from the exchanges, and better performed in the long run. But short term, we will find something interesting. Short term is not that important. Overall, I think we conclude that the technology sophistication, so which means that if a crypto use more sophisticated blockchain technologies are more likely to actually get better performance in the long run. And the technology sophistication indeed actually is an important driving force for the crypto valuation. Now, I see some chat. Let's see. So little bit discussion about literature and contributions. There's in the fintech space in general is still relatively young literature and still in the infant stage. Our paper at least contribute to 3 literatures. First is about theory of digital coins. The finance literature about cryptocurrency or the digital coin in general has mainly heavily rely on have been mainly by theoretical papers, because for empirical papers we have to wait to have enough data to conduct empirical analysis. The prior literature emphasized technology in these models. There are a lot of various models that emphasize technology is crucial understanding cryptocurrencies in various of settings. But empirically, we haven't really tested on that. I think this paper makes a nice contribution by providing novel measures and also new empirical evidence that indeed the technology are important for cryptocurrency valuations. We also contribute to the empirical studies of initial coin offerings, which is kind of still limited literature. They have about 2 or 3 papers. They focus on various variables how affect the crypto returns during the ICOs. And these usually they focus on social media, momentum, regulation, etc. This paper provides new insights on the impact of technology on the cryptocurrency valuations. This part hasn't been documented before. More generally, this paper also contributes to the text analysis in finance. This has been also relatively young literature. The previous literature has been mainly focused on corporate, for example, corporate disclosures in news media articles, etc. In this paper we found actually we focus first. Our contribution focus on 2 contributions. First, we focus on different type of documents, which is about cryptocurrency disclosure. Second, we also use actually relatively new methods. We use LDA and word embedding. Although there's only a few papers use that, but still relatively new method in the finance space. Now, let me talk about a little bit about how I construct these measures. A little bit about data. We started from about 3,000 in ICOs from early 2017 to until the end of 2018. So we started this project in end of 2018, and we get the first draft in 2019. Right now, we are collecting more data to update the sample, which is also very time consuming because there are not very standard database that we can have like easily download all the data. We also look at trading data, and more importantly, we have to download all the ICO white papers. So what we do is we download all these PDF documents, and then we convert this to be a TXT file, text data, which can be machine readable. This whole process actually takes a lot of time. Once we have these text data, we will use these text data to construct text index and readability and time and uncertainty. We use the other measure as well, and I'm going to talk about details in a minute. Now, I want to give you a little bit more about how we construct the tech index. We use both supervised machine learning and unsupervised machine learning method. For the supervised machine learning method, what we do is that we have a team to read manually, kind of randomly select 200 white papers, and we read it and manually assign a score from 1 to 5. 5 means high, about whether the description of the technology involved in these coins is high or low. We use that as a training sample, and then based on the training sample, we apply this supervised machine learning method to assign scores for the rest of samples. We have about 1,700 white papers in total. For the unsupervised machine learning method, we use both two methods, word embedding and LDA. So the word embedding and LDA, the advantage of use that method is that require little human input. So we do not really rely on any information about whether we know anything about crypto or not. Anyway, there's advantages of disadvantage of both methods. So we use both. And in the end, for both these methods, though the tech index will be the fraction of words that belong to the tech topics. So in the end, for the unsupervised machine learning method, each document we are divided into different topics, and we will find the topics that is relevant for the tech related, blockchain technology. And the fraction of that part of these topics will be the tech index. So higher tech index means that the document has a large fraction of the words describing about the technologies. In the end, we construct this composite index, which is simple average of these three indices. For all our main and empirical analysis, we are focused on the composite index, but the result is very robust if we just use the supervised machine learning method or unsupervised machine learning method. Now, I just want to illustrate, how we construct this the topics. For the ALDA, as you can see, what we do is that we need to find what's the optimal number of topics in the document we need to use. So we have in the paper we'll find a way to what's the optimal number of topics we want to use. Turns out that for both for ALDA and for the word embedding, it's 20 topics. Now, once we have the 20 topics and we look at all the topics carefully, and we will see whether there's multiple topics that probably related to the blockchain technology. And we find indeed this is a case. So we use a method, both two methods. One is for the left, we have a structured tree method to group these different topics. In the right-hand side, we also have these location method, this graph to see, the topics are similar to each other, tend to group each together. They show up each together in similar locations. We found that there's usually for LDA there's about 3 topics that are related to the blockchain technologies. One topic is blockchain, and the second topic is information, and the third topic is system. Now, for each topic we have these word list, keyword list, which is in the paper, and shows that what are the words look like. Similar procedure are used for the word embedding technology method. Now, to better understand, what affect these indices to begin with, right? We study the determinants of the technology indexes. We look at various of crypto characteristics. We have this Ethereum block, whether or not they use Ethereum blockchains. Now, just to give you a little bit of background. So in general, for most of these technology, the cryptos, about I would say 80% of these cryptocurrency use Ethereum blockchain as their platform. We also have variables about GitHub data, number of code revisions, and etc. And we also have white paper informations and other characteristics. Now, here is the determinants. We found that in general, if you use Ethereum blockchain, then the tech index is lower. So which is totally intuitive, because Ethereum blockchain is still relatively basic, right? So the first basic technology, blockchain technology, is Bitcoin. Then we've got Ethereum. Then we've got also more advanced blockchain technologies. We also found that for the GitHub, in general, if there's more revisions about the code on the cryptocurrencies GitHub website, that's mainly suggests that tech index is higher. But having actually GitHub website is not necessarily a positive correlate. In fact, it's negative correlated with that. We also we construct several like fog index, time, uncertainty about these documents, ICO white papers, and we found that the fog index means that readability. It means higher fog index means that more readable. So the fog index coefficient on the fog index negative means that if the if the document is more readable to a general audience, then in general, the technology involved is actually lower, which is also totally makes sense. I personally read through about 300 or 400 white papers of ICOs. I found that most of them are not easy to understand. So the readability indeed is negatively correlated with the technology involved in the ICOs. We also, of course, look at various other variables. I will not go through one by one of them, but I want to just mention that has a Twitter account is positively correlated with technology as well. So this also makes sense that it probably shows that they are confident about their technology and they're doing a good job in terms of marketing as well. So the first set of that's kind of determinant. Just want to get a sense about what's going on with these cryptocurrencies. Any questions so far? Before I talk about the determinants.
Jinfei, I'll get people to write in the chat if they have questions for you, and maybe you can come back to look at those. Otherwise, we'll save the questions till the end.
Sure. Yeah, that works for me. Now I'm going to talk about how the tech index relate to the cryptocurrency valuation or performance. So our empirical analysis exam several outcomes. We look at the several outcomes, but the regression model is similar. The first regression we want to look at ICO success. So not all the ICOs, initial coin offerings, will get succeed, right? So and then not all of them will get funding. Not all of them will be listed in the exchanges. So right now here one of the measures is where the coin is listed on the crypto exchanges, and we include a bunch of control variables. And the tech index is the main variable that we are interested. We have a bunch of fixed effect, and that's very standard in the literature. Now we found that we have two main variables to measure the success. We found that if the company, so the coefficient on the tech composite is positive and significant, meaning that if the tech index is higher, the cryptocurrency is more likely to raise funding and more likely to be listed on the cryptocurrency exchange. So this suggests that investors indeed recognize recognize that if you have good technology to back your cryptos, then we give more funding, right? So indeed the market actually value the technology sophistication, and the magnitude actually is big. One standard deviation increase in the index will lead to an increase about the probability about 5%, which is 21% of the mean. That's a very big magnitude. We also look at the long-term and short-term returns. We found that the coefficient on the look at short-term return means that 7 days, 30 days, and 90 days, and the coefficient on the tech index is not significant. This suggests that the tech index is not correlated with short-term performance of ICOs. Now, I'm not showing here, but in the paper we also look at the other topics in the ICOs. Well, in the white papers, we found that the topics related to marketing, related wording, actually positive correlated with the short-term returns. So it seems that taking together this result and the result with marketing topics, it seems that in short term, marketing matters more than the fundamental of the technology. But if you look at the long-term performance, we look at 180 days, 240 days, and 300 days, and we found that if the cryptos have better technologies or have a high tech index, then they tend to have a better long-term performance. So this result suggests that probably it takes time for the investor to recognize, to realize that which coin is good, which coin is not good in terms of technologies. So eventually that's kind of related to it's also consistent with the literature in finance about people have limited attention, and people have limited attention to capacity to process information. As a result, for investors, it takes time for investors to process the information. In this case, is the white paper. Another variable, another interesting variable to look at is the negative outcome, which is delisting. So some of the coins, if they turn out to be really bad, then they will get delisted in the end. So we found that the coefficient on the we found the tech index have negative correlation with the delisting probability. This means that if indeed, right, this is consistent with the previous result. The high tech index means that probably better technology you are having in the cryptocurrencies. Then this result shows that if you have a better technology, you are less likely to get delisted, which is consistent with economic intuitions. The magnitude is also big. The one standard deviation increase is about to 2% in decreasing in delisting probability. A little bit discussion is we also have additional evidence suggest kind of support the delayed reaction mechanism. We found that the long-term horizon return probability are weaker for cryptocurrencies, have a high readability. And there's no evidence that long-term reversal, we don't see long-term reversals. We have various of robustness tests and to look at different methods, different measures, and the result is robust. Now we also want to compare this result to the other tech-related measures. So all measures rely on machine learning methods relatively harder to construct and also relatively have high entry barrier to do the analysis. But there's also other variables about technology, the technology aspect of the cryptos, but these variables are simple variables. We want to compare these variables. So one variable is just the number of commits from the GitHub website. We found that indeed these commit is important, but our result is not really affecting in a significant way if we control the log commit. And even for the simple word count, that's potentially another way to measure. It's possible that the word longer documentation probably has more to say about the technology. Well, we found indeed the word count matters for the performance, but this result does not really affect the tech index. And also, if we compare the magnitude of this coefficient, if we look at column 4, the coefficient of the tech composite index is significantly bigger than the coefficient of the log commits. Similar for the simple word count. Overall, I think we conclude that our tech index first is robust controlling for the other variables. Second, it seems that our measure is also better measure about to capture the technology aspect of the cryptocurrencies. Now, to conclude, we construct the set of 4 text-based indices from the comprehensive sample of ICO white papers, 1 supervised machine learning, 2 unsupervised machine learnings, and then we have the composite index. The technology sophistication is important driving force for the cryptocurrency valuation. We found that in ICOs with high tech index are more likely to succeed, less likely to get delisted. And also, although tech index do not significantly affect short-term returns, but it has positive impact on their long-term performance. Our findings actually have important implications for the policymakers. Right now, the disclosure of white paper is not required for ICOs. We think this should be required documentation, such as like IPOs, right? You need to provide a prospectus. And for the ICOs, I think SEC should require all these ICOs to have white papers. And for the investors, there's valuable information from white papers. So for investors, probably it's worth the time to reading the ICO white papers if you want to invest in the cryptocurrencies. Okay, that's all. I'll be happy to answer any questions. I hope I'm doing okay in terms of timing.
Oh yes, keep going. Yeah, it's great.
So I see Chang Lu has a question. Let me read it. does technology sophistication mean that the technology is more secure with people design token economy to protect privacy better? John, that's a great question. So right now we don't really distinguish that about what technology they involve. So because I think that's one kind of limitation about machine learning method. So we don't, right now we just group them into different topics. So the technology sophistication tech index means that they describe more about technology they used in their white paper, in their coins. Now, based on the reading of 400 white papers, I believe this is indeed the case. So, so I think when the tech index is high, that means two things. One is that the technology they use is probably not necessarily better or more sophisticated than others, but they know it better. So they describe their technology in a better way, shows that they know the technology. It's not that they do nothing and they just want to talk about it. The second is indeed they use more advanced technologies and they describe in a more detailed ways. For example, one white paper I read is I found that they have very detailed discussion about why they use a blockchain technology that is way better than Ethereum blockchain technologies. They describe why it's better. They have mathematical formulas and have very long discussion on comparison about that. So the short answer to Tom's question is yes. So we kind of partially capture that part, but it's more than that. So if the technology they use is not necessarily more sophisticated, but if they describe it in a better way, that also will have a high tech index. I also have a question about Jared. About the listing is so for the cryptocurrency in general, there are a lot of cryptocurrency exchanges. So there are a lot of that. So there's many. We do not distinguish which one. They are international. Some of them. So let's say if you have a coin that is in Canada, you don't need to like list in Canadian exchanges. You can go to another exchanges in United States, etc., in Europe, etc. So there's the different exchanges have different requirement. In general, the requirement is not that high, but listing is very expensive. Listing a coin costs usually about $2 or $3 million US dollars. For these variables, so the white paper does not change. So white paper is describe what they're gonna do. So they will not change what they do about the white paper. So the variable does not change after they listed it in the exchange. I hope this answers questions. I couldn't find any code for blockchain. Okay, this probably is not any inside white. So I didn't have the chance to discuss about. Chen had a question about why technology sophistication may increase valuation. So the valuation is that. So the idea is that if indeed the technology sophistication means that the coin is better, so meaning that you have better fundamentals. So if you have better fundamentals, means that usually the valuation itself, right? So the price should reflect the fundamentals. So even for the corporation, a firm, a public firm have better fundamentals should have a better valuation, right? Higher stock price, better returns. Similar story here. So so the argument is that better technology sophistication means that you have stronger fundamentals. Especially this is true for these cryptocurrencies because their main technology is blockchain technologies, right? So if they have better technologies, they have stronger fundamentals. As a result, they have a better valuation, have a higher returns.
Hi, Jinfei.
Yeah.
So just to continue the discussion, the reason why I asked that is that previously I had read some white papers of some blockchain projects and also talked to some of the project founders. My experience is that yes, sometimes, a lot of times, if the project has very sophisticated white paper, the founders really understand blockchain better and their technology is indeed better. But
Yeah,
there are
yeah.
also cases where, you know, the founders just very good at marketing and writing, you know. They know
Yeah,
how
yeah.
to write a sophisticated white paper to make it look very sophisticated, advanced, so that you know, they could woo their stakeholders and kind of push the price of the coin higher. So yeah, so you know, have you considered those kind of situations? And also, you know, if that's the case, then I was wondering, maybe sometimes technology sophistication is related to valuation, because you know the sophistication of the white paper, at least you know, in this study, as measured in this study, would create a better impression or you know perception of the project. Not
Yeah, I agree.
necessarily the project is really
Yeah,
solid.
I know. No, I totally agree with you. So that's excellent question. That's something that motivated us, the project. I think there's a way to do that. Right now, it's just that is a text data. I mean, the machine learning method we use is already the cutting edge, I believe. So word embedding and the LDA. But still, I think a little bit challenging to really recognize what exact technology you use, right? And also distinguish ones that who are like, you know, I would say, you know, probably just doing the marketing, right? Play the game, not really doing that. So so I think my answer is that the result here is average result. So on average, we found there's positive correlation between the tech index and the valuation, but this is not necessarily the case for every cases. So I believe that the market itself will correct that if they do the marketing, only doing marketing, the team does not really know much about technology, then probably they will be punished by the market by having lower valuation, even delisted later on. But I think that's a good point. That's a good point. That's something we can check about ex ante, ex post, given that we can have actual comparison about among the delisted one or the flawed ICOs, how many of them actually have tech index, how many have not tech index. So then we can have a kind of something like that. We think about actually have some additional tests about fraud, then whether our tech index can produce fraud or not. They should actually have negative correlation in a prediction with fraud. So high tech index means that less likely, but still I'm sure there's a few of them have high tech index then turns out to be fraud or scams. But I think the conclusion from this paper is mainly that they're less likely, right? Because the average regression result is the average result. But indeed, I think ideally we want to have kind of, you know, even from the industry perspective, right? If we can provide a product to screen, right? I mean, if I have an app to read through the white papers and tell you that, okay, this white paper is cheating, right? And just say no, right? And something like that, you know. I think we probably can do something like that with a combination of both machine and reading, human reading. So I think using only machine learning method probably is very hard to achieve like 100% accuracy. But the average, I think here is result is kind of showing is okay. Yeah, but I think there's a lot of room can be improved. Yeah.
Oh, thank you very much.
Yeah. So I see a question from Raw. Let me actually make it bigger so that I don't miss anything. How ICO success failure relate to microeconomic environment, particularly liquidity in terms of money supply? Be interesting. Roy, that question is interesting. It's not the focus of this paper. So academia paper usually that has been done. It's been done in the literature. So people usually don't find much relation between the ICO and the macro variables, or not only ICO in general, Bitcoin price. So the correlation between Bitcoin price or any macro variable, inflation, market, aggregate market return is very weak. That's the literature has documented so far. So it's not the focus of my paper, but that has been documented in the papers, in the literature already. But having said that, that's based on the past experience. So the COVID actually has changed changed many things. So my own observation is that after post-COVID, the correlation between cryptocurrency valuation price and the market return and the macro variables is bigger than it before. So although I would say if we run regression, it's still gonna be probably not significant, but the correlation has been increasing over time. So probably in the future, it's gonna become significant. Yeah, I hope that answers your question. So you have another question about white paper validation. Is there any service that, yeah, so that's excellent question. That's something I discussed in the end, right? So so Roy's question is that, is there any service out there that does compliance and due diligence on white papers to provide some valuation? Not as far as I know, for several reasons. First, this is a new phenomena. And for people who know that crypto space is very limited people. As you can see, even for university professors, the number of people who are doing research on cryptocurrency, blockchain is still very limited. There's only single-digit people, usually at each university, there's only single-digit people that are doing this type of research. So this space still have a lot of room for development. I also actually talked to people in the law school as well. They actually there are some people interested in this space, but the number of people who are expert in the area is very, very rare. It's very, very low, and people who know this space very well is rare. Yeah, I think that should be, to me, I think SEC should actually have a unit or in some department to have something like doing that, to require the ICO white papers and read through the ICO white papers and doing some compliance and due diligence for this space. Or some law firms, if they can provide us that service, that also can be a very necessary and promising area to go. Okay, and yeah.
Okay.
Vicky,
Oh yeah.
Yes.
Just checking to see if you were. I thought we'd lost our connection. If things went silent for a while.
No, I'm still here. Yeah.
Yeah, so any other questions? Yeah, if you have any questions, you can either post them on the chat, or you can also open a microphone and have a conversation with Professor Sheng directly. Yeah, okay, so any questions?
Yeah, seems I already posted a link to the paper. Oh, I think Roy has a question whether you expect similar results for research for IDOs or any key fundamental difference between ICO IDOs. Right now, I don't know. So because so from academic perspective, I don't say anything that I don't know. So we haven't done any analysis about IDOs. That space, I think, is even I would say even newer than the ICOs. So right now, I don't know whether IDO will be similar to the ICOs. So the any key fundamental difference between ICO and IDOs, I think it's depends on what do you mean fundamental difference. So if we are talking about the technology involved in difference, then probably it's not that much in some sense, because they're all based on blockchain technologies. So the difference between ICO and IDO will be smaller than the ICO and IPO, because IPO and ICO are very total different animals. The other things, the methods involve different things is very different. So in one way or another. So I'm not very particularly familiar with IDO, so I cannot speak too much about that.
So Jinfei, just sort of thinking where this could go next. So you've made established a link correlation between technological sophistication, mostly focused on white papers.
Right.
I'm wondering, when you looked at the white papers, were you looking at also sort of the rankings of the individual contributors to the white papers, like maybe things like H index and things that we would normally use to determine the scholarly influence or the technological sophistication of the actual authors of the white paper.
Mhm.
So in other words, is there have you looked at the authors and who is part of the team, as well as the content of the paper?
Yeah, that's an excellent question, Vicky. That's wonderful. Yeah, that's something we on our to-do list. So it's a little bit challenging because we have a relatively large sample. We've got about 2,000 ICOs, 2,000 white papers. So then if each team have about, let's say, 5 team members. So one thing we can do is we check each team members on the white papers about whether they have technical background, right? Technology background. That's one thing we can do, but we haven't done that yet. But that's excellent question. We can do that to something like that. That's something we thought about that before. We haven't done that because it requires a little bit more manpower to conduct that analysis. We have to hand collect some of the data on that.
Mm-hmm.
Yeah. So essentially, we are talking about if each of them have 5, we are talking about 10,000 team members, and check each of them whether they have technical background, etc. So I think it's doable. But yeah, it's all to-do list. I think it will be great if we have that. It will be actually in the literature, people are already doing that, but they have a very small sample. They have like 100 people. They run some analysis. They found that if you have more, if you have your team, if the team have like have someone from technical background, you're more likely probably to get funding. And if the team have more entrepreneur experience, and also you're more likely to get funding. And it turns out actually the entrepreneur experience is more important than technology part in general. But we didn't really check. We can also check the authors, right? Who wrote these white papers as well. So that part, I think, is the nice thing about ICO white paper is that it's not usually prepared by lawyers, not unlike the prospectus of corporations. So that's a nice thing. There's a lot of variation we can use. That's something we can probably dig in a little bit more. Yeah, that's an excellent question. Yeah, suggestions.
And if you're, like you were suggesting, the ICO, the white paper is almost sort of serving the role of the prospectus that in some ways. That are you seeing a standard structure for these things emerge? Are you seeing sort of the kind of content you would typically want to see in a white paper?
I would say there's a lot of variation. So first, the ICO white paper is voluntary, so it's not required even for ICOs. So interestingly, people would invest in an ICO. Essentially, you have black box, right? That's why a lot of criticize about ICO is that it's not like IPO. Let's say before IPO going to IPO, we know that they're producing phones, right? Even that is a private company. I see something. But for ICO, literally, you have nothing, right? I promise I'm gonna do something with the blockchain technology and deliver something in the end. But at that stage, I have nothing. If you don't even have white papers, literally, you have to rely on nothing, literally, right? So, but surprisingly, actually, more than 20% of the ICOs they don't even have white papers. Now, about among these 80% of the ones have ICO white papers, there's huge variations about white papers. There's very sophisticated ones. Some of them one is just like a mathematical papers written in LaTeX, right? There are a lot of equations, formulas, high technical. They are very hard to read. I mean, I read like about 400 of them. Some are, honestly speaking, some of them are very, very hard to understand, even for people who has a finance PhD. While some of them is very like marketing related. They have do something when they describe the technology part, they will just describe something, we will use, Bitcoin blockchain, Ethereum blockchain, something like that. You will see that is very brief, though there's huge variation. And also in terms of format, there's no kind of standard format. So again, I think that's the reason, because SEC does not require, or any regulated body, even in Canada, right? So even in the Canada, I don't think they have a requirement too. So I think the standard structure will come through if the SEC or the regular body in Canada can require these ICOs to file. Is required, they have to fill in everything in a standard format. That's, I think, is one policy implication we discussed in the paper and also in the conclusion. So this first should be required and also should be standardized.
Yeah, interesting. And it would certainly help create transparency.
Yeah.
So you've mostly placed it, and this is fair enough in the research, you're looking at technological sophistication and its relationship to token valuation. Like, where do you see this fitting in relation to things like the total volume of tokens that are issued? Like, we've got trillions of tokens, and of course, then others, you've got much fewer tokens. And so like supply of tokens and its relationship to token value, and also things like token burns, have you looked at how those play out in like the whole kind of range of factors that might determine overall valuation for a token?
Yeah, that's a good point. I think we haven't really, for this paper so far, we haven't really looked at that. But I think the volume itself, indeed, I think it can be interesting. So there's about one finance paper published so far. They look at mainly various variables, small sample. They look at mainly I think like the team members, social media, etc. But I think indeed the token value, token volume, right, the supply, can be interesting variable to look at. Yeah. So I think so far right now I haven't really looked at that yet. So usually one paper will have like several variables to check in. So, but that's something we can add into too. But this paper mainly focuses on technology perspective. I mean, but
yeah, fair enough.
Yeah, but I agree that can be interesting too. So a lot of these analysis depends on the variability of the data. So when we start a project in later 2018 and early 2019, the data quality and the website itself still only, I think, okay. But now I think over time is improving. So it allows us to collect more data. Yeah.
But going back to your point about the white papers, I mean, I do think that token volume does play into, I've seen it in some discussions of some cryptocurrencies, like most recently Shiba Inu. So that's the kind of thing where, white paper, you would expect to sort of see that information, kind of like you were saying at prospectus, where, okay, this is our total token volume. This is how tokens are generated. These are, the expected the expected length of time that the tokens will be, that they'll be available for mining, if it runs on mining, etc.
Right.
So these are all things that you would expect to see, but you're right, it is very difficult to get all this information sometimes on tokens as to what is
this part I think probably is okay. I think extract, if we know what they're gonna say in general, if we know exactly the wording, is very easy to extract the information. Yeah. So if we know, kind of somehow standardize a little bit, essentially it's a numerical number that we should probably look at, right? So that part should be easy to extract if the variable is not there yet. But yeah, I think that's something actually we can check into. Yeah.
And I think the other thing that I've sort of see play into token valuation myself, and I don't know if you have looked into this or think that it's important is governance of the actual protocol. How are the rules changed? How's the protocol decisions made about staking and various other aspects of the management of the token and the ecosystem. And so did you see that in any of the work so far? Did you see that coming into focus is an important aspect of this, or has that largely been something that isn't really figured too much into your own research at this point?
Yeah, that's an excellent question. Indeed, I think that's important. So my view is, we didn't really touch here, but my view about understanding the literature is there's some kind of touch a little bit that about, if the founders have bigger stakes about the coins, right? What's the fraction of that? Then whether this will affect the succeed of the ICOs, which makes sense, right? If I have a big stake in the game, then I'm more likely probably will be involved, right? So also the funding team. So there's some evidence on that. So, but I think the more accurate, I would say more sophisticated measures about governance and other aspects, I think it's still not there yet. So my view, so my overall view is, I think first, this is super important. There's something there already, but there are definitely more rooms actually to be explored.
Yeah. I mean, it's interesting about governance, what you said, because I could see it playing both ways, because like you could see in typically in a new venture valuation, if you see that the founders have large stakes, they have a vested interest, they've invested, that's a good sign. But sometimes in the blockchain space, it's a bad sign when the concentration of tokens is too centralized. And there's a desire and push to have things be more decentralized. So there's not like control in the hands of, too much of a centralized force. And I find that like is maybe an interesting tension or difference between blockchain venture valuation and token valuation and traditional, startups and ventures. And I don't know, I don't have any particular answer to this, but I do see that is there's different attitudes towards, the founders have large stakes and that's good. And the founders have large stakes, and no, that's really counter to the decentralized ethics and of the space. So there's probably something to be explored there too. Yeah, but we've reached the top of our time, and this has been so interesting. And, as you had pointed out, there's so few people that are researching in this space. It's really wide open. You have such a rich, kind of area of research to explore that will probably keep you busy for like a very long time, because there really isn't much. And I thank you for the research that you've done, and for starting us on, this validated empirical journey of understanding what actually drives the valuation of cryptocurrencies and tokens. It's important to get more solid evidence about what, how these markets are really operating and what's driving them. So we hope we can have you back again. And we will be making the recording available through the Blockchain at UBC website. The first part of just the introductory part was cut off a little bit, but the bulk of the conversation will be there. So the excellent content for this paper, and of course the link to the paper as well, Jinfei has made available, so you can actually read through and study and reflect on this at greater length. So thank you again, Jinfei, for your excellent work in this area. Really, really a great contribution, and we're delighted that you were able to join us today. Thank you for coming back and sharing your research with us, and we look forward to having you back again as your research progresses. And thank you all the listeners today, participants. Thank you for coming and being part of the Blockchain at UBC community. And if you have ideas for talks and suggestions for us, please reach out and let us know. So thanks everyone, and we look forward to seeing you next month again. Okay, Bye for now.
Thank you, Vicky, for having me. Always, anytime, want to come back to UBC.
Pleasure. We welcome you. Okay, well, see you for now.
See
Bye.
you. Bye-bye.